Hello traders, Gary Wagner here for Trending Markets, approximately 11:10 in Honolulu, 5:10 in New York on Thursday, 16th of July. We've got a incredibly strong equities markets just raging. I believe NASDAQ closed at or above the record high. Dow Jones Industrial just a few points off of it, 18,120.25. You can see these highs that are just up here. This is our weekly chart. In fact, let's go ahead and blow that up a little bit. And so you can see these highs that are just really above this little area right here. We are very, very close to the record tops in the Dow Jones Industrial Average. Of course, we had Yellen speaking today. Rate hikes are obvious. Markets pretty much factored that in. There is our record top that we've had in the Dow Jones, and it's obviously not a straight line, but we're not that far off of the market right now. I am really, really curious to see if this market continues on this upward track, if it's going to steamroll through this area. This becomes some sort of a support level as opposed to what we have seen, which is this really being our ceiling, in which every time we've seen the market kind of come up to this point, it's kind of backfilled. And you can see that happening on a number of occasions. So we are absolutely consolidating in the market. You can see that at different highs that we've hit, where here you had a consolidation, of course, and a correction. Consolidation and a correction as this market's moved up. But as it hit these record tops here, let me go ahead and erase these areas. But as we've hit these record tops here, what you're genuinely not seeing is that real strong correction coming in. It's really been trading within this defined trading range as it has hit these tops on at least a couple of occasions. This would be the third stab. We'll have to see if third time is the charm or not. So traders, the next market that we really want to look at is crude oil. Let me go ahead and pull this back up in a second, but continues to slide. Will it break below 50? I believe so. Will it head back towards 40? I absolutely believe so. Will it do that prior to finding support and getting some sort of bounce before it gets slammed again? That I'm absolutely uncertain about. But when we look at our daily chart, this is in Japanese average format, we are back to that consolidation area. Although we're seeing lower prices at this 50 area, look at this on a daily chart. Over the better part of this week, you've got very, very small bodied candles. Yes, the majority of them are either to the red or in essence unchanged. I don't see any green whatsoever. We've had consistent down days there. But when we consider the market falls like a rock here, coming down from 100, then it tries to find some supports, unable to do it, comes in and makes a lower low. This is back in March of this year. And it comes up, and one thing that we noticed is as it came up, it really stalled at this 60 level right here. And this is that consolidation. So what we saw in this market is as it came up, it hit an absolute top. Resistance, $60 a barrel, wasn't going to move past there. Trade sideways for the better part of 1-2 months, and then now trails lower. Now, the other thing that we want to look at is what is this level significant of? Because we know in these 40s, these are these recent lows, 41, this being at around 46. But when you look at these tops here, let me draw that over, you can absolutely see that we have pretty much tracked underneath the highs. If we look at the bodies, though, of these candles, in other words, the settlement or closing range, you can see that we're just at but slightly above that area. So this is an area we want to see. Is it going to find support? Will we see a bounce from here and then lower? Or are we going to simply see the market move sideways, lower, sideways, and lower? My sense is if I had to bet one way or the other, I would bet sideways and lower. However, anything can happen in these markets. So we want to genuinely see, do we find support? Because if we break through here, that is our sell trigger and it initiates a short play in crude oil. Market bounces up here. It sets a whole different set of parameters. And once again, I don't see fundamentals at play that really make me a comfortable long in this market. Can you say steamroll? Dollar continues to just have a significant move in the market up almost 0.5% today, 97.63. As you know, I believe that we have two real levels of resistance currently in the dollar. I believe that this first one will absolutely be taken out, and that is roughly at the area in which we hit our highs today. You can see that right in here on this daily chart. In fact, let's go ahead and blow that up so it's a little bit easier to see. But quite easily, you can see that these tops here, this is that first level that we're looking at. Let me make it as straight of a line as possible. And it also matches up quite eloquently to where the highs of this market was. If, in fact, we see this market continue to steamroll and move through on a closing basis, that would signal a long play in the market. We would put our stops just below this area, and our initial target would be 100. I think that that's where we're going to see the dollar index move over time. Lastly, although we had a resolution and we've had real headway made in terms of the debt crisis in Greece and the bailout package and austerities required to accept this money, there's still details that need to be worked out, but some funds have been released. And we are seeing alternatively some real pressure in the euro, now trading below 109 at 108.77. And traders who've been with me since the beginning of trending markets, 108 is a number that I have been looking for. I thought we would get there sooner rather than at this point. However, we were correct about our targeted price. Now, when we look at this particular market, let me set it up in a way that really makes some sense and move a couple of things out of here. What we've noticed genuinely more than anything else is these long-standing channel lines as we've seen this market come under pressure. This being that upper level in which has provided some real resistance on a technical basis, support right in here, and our mid-range. My sense is that we're probably going to see this market drift lower. As I said, I was looking for initially 108. Parity wouldn't surprise me if, in fact, we have a scenario build where we do have a building of this uncertainty in Greece once again as they work out the details. Of course, that affects the global markets, but this dollar has been the place to go when that kind of activity transpires. So we could easily see the euro track back down. My new target, we'll have to see if 108 gets hit, but my new target, if in fact it does and we continue under pressure, we'll initiate short positions, and our basic exit target is going to be roughly in the 105 area, and it's based on this technical chart that you're looking at in terms of where we think it could go. These bottoms are where I think we would find some sort of support come into the market. Depending on the time parameter, that could actually be achieved as we cross or get to this midline. So, in other words, we find support on a technical basis here, as well as the market coming down, hitting that midline and moving back up. We saw it happen right here, and that's why I wouldn't be surprised if that's how we saw euro value unfold over the next 2 to 4 weeks. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.